As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Good evening to our professional colleagues, friends, and student members of the Institute of General Accountants of Nigeria. And once again, we welcome you to another episode of ICAN on Air, your great platform for learning powered by your noble institute, ICAN. I'm your host for today, Tosin Akinwumi, FCA. And please inform your colleagues that we have started this show and that they can be part of this show on ICAN social media handles, ICAN Facebook page, or ICAN YouTube channel. And today, Thursday, 27th June, 2024, we are looking at another contemporary topic, corporate governance, key to financial responsibility, accountability, and transparency. A famous quote on corporate governance says corporate governance is being described as doing the proper things and being prosper. How correct is that? You will get to know today as we host a distinguished council member, the Honorary Treasurer of our noble institute, the Chief Value Officer of Zero Cube, in person of Dr. Seyi Olanrewaju, FCA. Let's sit down and relax. Don't go away. I'll be right back with my guest on the show. Then we'll talk on the topic, corporate governance, key to financial responsibility, accountability, and transparency. Let's quickly go on some commercials. I'll be right back shortly.
The Institute of Chartered Accountants of Nigeria, Canada District presents the 9th International Accountants Conference, themed Strategic Upscaling of Accounting Profession within the Dynamics of Technology. Date 16th to 20th July 2024. Time is 8 a.m. to 4 p.m. daily. Venue, Best Western Premier Calgary Plaza Hotel and Conference Center, 1316 33 Street NE, Calgary, Alberta, T2A 6B6. Seasoned speakers like Seyi Olanrewaju, a partner at MNP Calgary, will be speaking on review of the accounting profession and technology synergy. Derek Greer, the Chief Information and Security Officer, Protexer, will be speaking on disruptive technology and AI upscaling for accountants. Greg Howe, the CEO, Black All Systems Calgary, will be speaking on accountants in the era of diversified profession, while Professor Godwin Emmanuel Oyedokun will be speaking on decision-making optimization through data mining. The Canadian High Commissioner as well as the ICAN President will also be in attendance. This conference promises to be value for your time and money. Hurry! Register today by sending an email to Mr. Blessing Familusi, chairman at icancanada.net, or St. Badamosi at ican.org.ng, or iadams at ican.org.ng, or simply visit our website www.icancanada.org. ICAN Canada Conference 2024. Be there.
Welcome back to ICAN on Air, and today we are looking at the topic, corporate governance, key to financial responsibility, accountability, and transparency. And I have here with me the Honorary Treasurer of our noble institute, in person of Dr. Seyi Olanrewaju, FCA. Master Taxa, It is an honor to have you in the studio today.
Same here, Tosin. Thanks for having me.
Thank you very much. Let me quickly tell you about this man you are looking at today on the screen, who is our guest today, and will be speaking on the topic. Quickly, their brief profiles. Seyi is the Chief Value Officer of Zero Cube and was the Chief Financial Officer of Digital Realty Nigeria, a company of digital realty. He's a member of the Governing Council of the Institute of Chartered Accountants of Nigeria and currently serving as the Honorary Treasurer of the Noble Institute. Previously, the Acting Managing Director and Chief Financial Officer or Board Member of Vodacom Business Nigeria, respectively. He's a 3-time recipient of the CFO of the Year Award in Nigeria's telecommunication industry between 2016, 2018, and 2019, and also a recipient of Africa Influencer Award in 2020. Notable ICAN person in 2020, Award for Service to Humanity in 2021 by Rotary Club and awardee of the top 50 CFOs in Nigeria. Distinguished program members, you will agree with me that our guest on the show is a vast and versatile professional when it comes to technical and financial reporting matters. So let's quickly go and start discussing on the topic for today. I say once again, it is a pleasure to have you on the show today, sir.
Thank you very much, Tosin. It's my pleasure being here.
Thank you, sir. So let's start this way. According to the knowledge coaches, they say that if you ignore corporate governance, then you should be prepared to operate blindly and expect your corporate losses to be tragic and catastrophic. Having you as guest on the show today will certainly give our global viewers the opportunity to learn from your depth of intellectual knowledge, skills, and experiences. So I would say, what is corporate governance in simple terms? And why is it such a powerful mechanism in the corporate world?
Thank you very much, Tosin, for that question. I will start by saying that corporate governance, it's very, very key in the corporate world. And I will say that most of the failures we have seen, corporate failures we have seen, majority are linked to inadequate corporate governance, bad corporate governance, or absence of corporate governance, as the case may be. In simple terms, what do we mean by the word corporate governance? It's just saying put a structure in place that will guide the day-to-day running of the business and how you want to direct your business. If I go to the textbook, corporate governance is defined, as a system of rules, practices, processes by which a company is directed and controlled. So you can see that we're just looking at a system of rules that you have put in place by which you want to run your business. So usually it outlines the relationships, the responsibilities between stakeholders, management, other stakeholders of the business, in fact, within employees of the organization. So by putting those systems in place, you are able to manage the business ethically, transparently, and of course, in the best interest of all stakeholders. Like I mentioned earlier, corporate governance is a powerful mechanism in the corporate world because it provides a lot of benefits to the business. Number one is that it protects the shareholders' interests. Shareholders are treated equitably. They are provided with information, with which to make decisions about the investment they put in the business. It also promotes transparency and disclosure. Remember, we said we've documented, some practices that will run the organization. So it forces you to be transparent. It forces you to disclose material information that will allow stakeholders to make informed decisions. And at the end of the day, it will reduce or eliminate the possibility of fraud, corruption, and what we can call unethical practices. It also guarantees or enhances the performance of the business. And of course, it attracts investors, It reduces cost of capital. No investor will want to invest in any business these days without checking the framework of the corporate governance of the organization. They'll be looking at the structure of your board, if you have. They'll be looking at the structure of your management, looking at they look at the gender, they look at how versatile the members of the management team are, how educated and exposed they are, what experience they have got. And what will this do? It will bring confidence and trust of the shareholders. It builds the confidence. They are able to bring in the fund because they are comfortable. And not only shareholders or stakeholders, it's for your customers, for your suppliers. Every suppliers want to deal with a company that have got a very strong corporate governance. Even customer, they want to buy from a company that has strong corporate governance. Employees want to work for a company that has strong corporate governance. So these are some of the benefits you get when you have a structure in place and you have, a very sound corporate governance as an entity.
Wow. Thank you very much for that loaded response. Some of us who know you as a teacher of teachers would not be surprised at that depth of definition and explanations of corporate governance. In your response, sir, you mentioned that corporate failures are being caused by lack of, inadequate, or bad corporate governance. I deliberately chose those three words, and I take it again. I take them again. You said lack of, or inadequate, or bad. That therefore means that corporate governance could be lacking, or could be inadequate, or could even be a bad one in organization. I want you to elucidate on these three areas, saying that inadequacy of, or lack of corporate governance, or even bad corporate governance in organizations.
Thank you very much, Tosin. I also chose those words very carefully because some people have corporate governance documented in paper, but in terms of execution or in terms of practicing it, they don't practice it. You understand me? Some also have it documented and they cherry pick. Talking about management and some board now, the one that will favor them, they will use it, they will practice it, they will implement it. The one that will not favor them, you see them hide it under the carpet. You understand? And some organization, they don't even have at all. They don't understand what is meant by corporate governance. They do things haphazardly. Roles and responsibility of the board, of the management are not clearly stated. You understand me? The way they recruit, they do it anyhow. There are no guidelines, no HR policies that says, okay, let's recruit the bright and the best. People recruit based on people they know and all that. So in that kind of environment, they 100% lack corporate governance. Inadequate, where people cherry picks. Then the first one, they have it documented, but they are not implementing it. These are what we have seen in the corporate world. Yes.
Thank you very much. I think that's very clear in terms of that explanation. Okay, so still on corporate governance, I would like you to run our global audience through the relevance of people, processes, performance, and purpose when it comes to corporate governance.
Thank you very much, Tosin. The four words you mentioned, I will tell you, these are like the engine that runs an organization or with which every entity is built. They are built on people, processes, performance, and purpose. They are very, very essential when we talk about corporate governance. And I will start with the first one, which is people. When we talk about people in an organization, in a company, who are we referring to? We are referring to the shareholders, we are referring to the board members, we are referring to the executives, we are referring to the employees, and every other stakeholders within the business. So what corporate governance does is that it ensures that the right people are in the right position, with appropriate qualification. I think I mentioned this earlier. Appropriate skills and appropriate experience. It focuses on transparency and accountability of this individual that play in every area within an organization. And it ensures that they act in the best interest of the company, and on the other hand, of the stakeholders. That's people. Then looking at process, let me tell you, organizations that do not have process, they will do things haphazardly. There will be chaos, and in the end, there may be fraud. So processes are expected to be in place. And what are processes? They are procedures, they are guidelines that govern how organization operates. So what corporate governance will do is that it will help them to establish robust processes, because the board will sit on them and say, what are the processes? How do you engage? All these are driven by the principles of corporate governance to ensure that decisions are made are going to be transparent, and they will be in accordance with the legal and ethical standards, that operates within that industry. It will cover areas like risk management, internal controls, financial reporting, then disclosure of information, especially material information, because some of the corporate failure that we have seen, even by world biggest company, is because they don't disclose the right information. They manage information, they show the good information, and they suppress the bad information. But if there are great process documented and approved by the board, they are not able to do some of these things. So good processes will promote accountability, it will promote fairness, and of course, it will bring about efficiency in the way the business operates. Now, the other point, is performance. Every organization, the primary objective is that at the end of the day, they want to make profit, especially the profit-driven corporate worlds. I'm not talking about NGOs now. When we talk about performance, what are we talking about? We are looking at organization trying to achieve their set of objectives and goals that have been set by the board of directors. So corporate governance play a very critical role in monitoring of these goals and objectives that have been set, in evaluating it, and of course, in ensuring that these objectives and goals are achieved. These are done through various performance metrics, the evaluation processes that we check actual versus benchmark and versus targets that have been set. And by so doing, you are able to hold management accountable for the success or failure of the business. So performance is also very, very key. And the last one is purpose. Purpose is like saying, why are you existing? What's the underlying mission or vision that you have got as an organization, which in most cases are beyond financial gain? So corporate governance will also help you define these financial and non-financial objectives of the organization. And in the end, you are able to achieve it and make sure that you also align your values with your goals and strategies. And in the end, you are able to make a very good decision, which is driven by information. So we say a strong sense of purpose will guide the ethical behavior of the business. It will drive them through social responsibility and, of course, through the long-term sustainability of the business. So these are essential items for solid corporate governance. Thank you.
Essential items for solid corporate governance, Dr. Seyi Olanrewaju, FCA. That's beautiful, I would say. Thank you very much for that detailed explanation. Now you talked about performance in one of the essentials you just described and explained to us now. And that will take me to my next question, saying that what role does corporate governance play in financial performance in general? Now let's come to financial performance. Let us know the role that corporate governance play in financial performance.
Okay, thank you very much. People often say that if it cannot be written down, it may not be measured. So one of the things corporate governance does is that it plays a critical role in the financial performance of a company. And some of the things, because it influences performance. How do I mean? Once you have set goals, when the board have set goals for the management to execute, The onus is on the board to put measures in place to ensure that these financial goals are achieved. And if they are achieved, we'll say that the company has performed financially. So some of the things financial performance does when we talk about corporate governance is that, number one, it boosts the investors' confidence. Because what it means is that corporate governance will allow the investors, it will make investors to be attracted to that company because they have a framework for corporate governance. So a company that have a framework for corporate governance is able to attract more investors or more money into its business because everybody believes that financial performance thrives in a strong corporate governance environment than an environment that does not have a corporate governance. So in the end, it will result in access to capital for the business. And the more the capital, the more you are able to do stuffs and the more profit you are able to make as an organization. Number one, it will also reduce the cost of capital. And in the end, it will make you achieve your financial goals that you have set for yourself. Another thing corporate governance does in the balance of financial performance is that it helps the management and the board to make efficient decisions because processes will be in place that will drive transparency, that will drive accountability, which in the end will align with the company's best interest. So this allows for better strategic decision to be made because we have a goal, leading to improve their financial performance. So generally speaking, I can say that corporate governance, and financial performance are almost Siamese twin. In a sound corporate governance environment, subject to other factors, financial performance achievement, it's almost sacrosanct. Are you with me? One other thing it does is that it will ensure financial reporting transparency. It will promote accurate and transparent financial reporting, which is very, very key. Most of the companies that have failed due to lack of corporate governance, what they have done is that most of them, because at the end of the day, everything still ends in Naira and Kobo, is that they have boycotted strong financial reporting and transparency. Like I mentioned earlier, they prefer to show the good information than showing the bad information, as against showing the real economic information about an entity. So they suppress the bad information. But when you link corporate governance with financial performance, it will enhance solid financial reporting and transparency. You report it the way it is. You don't manage something to now brood, a problem in the future. If you look at what happened in Enron's case, one of the biggest energy companies that we have in US, what were they doing? They were suppressing information. They only want to show the bad information and suppress other information. Where they make losses, they want to hide it and treat some of these things as off-record transaction, as against reporting everything in the financial statement. And one other things financial performance also does in the balance of corporate governance is that it allows them to focus on long-term sustainability of the business rather than short-term gains. You understand? The focus, the ultimate focus is long-term than making rush decision that will only bring immediate gain as against the long-term gains. So those are some of the things, how they relate and what corporate governance do when you bring about financial performance. It makes it easy for the people that have the oversight over the business to make decisions and see where things are wrong and what they need to do more. Yeah.
Okay. Thank you very much. I'm just picturing you in a classroom because you are giving it out. And I'm not surprised also reading one of the comments saying that thanks for bringing Dr. Oluwaseyi to do what he knows how to do best. And that's a good one. Thank you for that comment. Okay, so we are still on corporate governance and key to financial responsibility, accountability, and transparency. Please send in your questions. I trust that our mass attack, Dr. Seyi Olanrewaju, FCA, is here to do justice to your topic. at your questions rather. Okay, so moving along, how true is the assertion that corporate governance as a fulcrum for ensuring accountability and transparency can be frustrated? How true is that?
So, Tosin, I mentioned earlier that some organizations, they don't even know anything about corporate governance. Some, they have it documented nicely in the books. And some, they also have it documented, but they cherry pick. So I will tell you for free that corporate governance can be frustrated, and that's a given. It can be frustrated. There are a lot of factors under which you see organization frustrating corporate governance. But I mean, I will just mention, if you have you have your corporate governance documented as an organization, and there is no enforcement, you don't have enforcement mechanisms within your organization, there is weak execution, there is weak compliance, within your organization, definitely the implementation of corporate government that is supposed to lead to accountability and transparency in that organization will be frustrated. So that's number one. If you cannot properly enforce it, the company will not be able to prioritize accountability and transparency, which will lead to potential abuses and misconduct. So what are we saying here? If somebody has violated some of the principles you've documented in your own corporate governance, for instance, if you want to get a vendor, you are supposed to do RFP or RFQ, as the case may be. If the procurement team, for whatever reason, they boycott that process and just bring in a vendor, there must be set of sanction within the organization to ask questions. Why have you done this? Is it not within the threshold you are supposed to get RFP for? Why have you just gone ahead to pick somebody? And in most cases, when you look at it, they would or might have picked somebody that they have related to, which, you know what that means. They will not be able to do pricing very well. The guy may not be able to bring quality and all that. So there must be enforcement. If there is lack of enforcement, of course, you will frustrate corporate governance as touching accountability and transparency. Another one is weak governance structure. I mentioned to you, in some organizations, they have it documented neatly, but it's so weak because there is no necessary checks and balances to ensure that there is accountability and transparency. So how do you know that this exists, that there's weak corporate governance? Number one, on the board, they may not have independent directors. Maybe all the directors are executive in some places, which is not also right. A board should be made up of both executive and non-executive director. And to even still drive it down, you are also expected to have independent directors, in your board, because they don't have anything in the business. They are able to speak to power and they are able to speak the truth at all times. Another is insufficient board oversight or inadequate internal control mechanism. How do I mean? In some cases, some board, the people they put in there, they are people that can be controlled, people that are not man enough. I use that word very carefully. You understand? And what do I also mean? You have some organization, they say they have corporate governance. They only meet maybe once in a year or twice in a year. How will the board be able to perform its oversight function? Ideally, board is supposed to meet at least every quarter so that they are able to look at the activities of the organization, perform the oversight. Where they are hearing or where they are going south, as a business, they are able to stop them and redirect them in the right direction. If this doesn't happen, then of course, it shows that the governance is weak. And accountability and transparency in such an environment will definitely be compromised. Another one is a conflict of interest. I'm sure we have heard about agency issue, where the management team are doing what favors them at the expense of doing what should increase or enhance the shareholders' value. So that conflict, board must identify it and ensure that it's brought down almost completely or to the barest minimum, So you want to see a case where no individual prioritize its own personal interest over that of the best interest of the business, which could lead to unethical behavior, poor decision making, and of course, this will lead to lack of transparency in reporting because there will be something to hide. Lastly, before I go, you also see that organizations where they frustrate corporate governance are organizations where they don't have what we call whistleblower. You know, a lot of things happen, and if it's happening at the top, people down will not be able to talk. So in most organizations where they have solid corporate governance, you see them put together a whistleblowing mechanism where individuals can report what they think are anomaly, and they will not be able to identify them. They can speak their mind, they can talk what is happening, this is happening, they recruited without due process, they engage a vendor without due process, they approve something that ought to come to board, they did invoice splitting, and all those kind of things. But if there is sound whistleblowing measure, they are able to report this, and this could be nipped in the bud because before it brings down the corporation. Thank you, Tosin.
Wow. Mass attack is actually attacking the questions positively. Thank you very much, boss, for those responses. And now let's quickly go on and run some commercials. Those who have decided to bring their wares to ICAN on Air so that we can market for them at affordable rate. What are you waiting for? Bring in your markets, bring in your wares, bring in your services. Let us market for you at affordable rate. Let's quickly go and run some commercials. We'll be right back shortly. Don't go away.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. FIRS, it pays to pay your tax.
The Skill Up Artisans Program Super is an initiative of the federal government.
The aim of Super is to upskill Nigerian artisans for better employability. These we are carrying out by collecting the data of Nigeria artisans through massive registration, training, certification, and licensing for better job opportunities, both locally and internationally. Super will improve the quality of life of Nigeria artisans. It will improve the quality of work from Nigeria artisans, enhance work and professional ethics from Nigeria artisans, reduce dependency on foreign artisans, and increase foreign exchange through talent export.
Log on to super.itf.gov.ng to register now. Super, upskilling Nigeria artisans for super job.
Yes, you are welcome back to ICAN on Air. The second part will say, and as we are discussing today, the topic, corporate governance, key to financial responsibility, accountability, and transparency. And with us here is our Honorary Treasurer in person of Dr. Seyi Olanrewaju, FCA, and certainly he has been doing justice to that topic thus far. And can I shock you? I've been seeing questions, lots of questions from our participants today. And I will want to take as much as possible we can take within the time limit that we have. But before then, let's quickly recognize are some of the early joiners, some of those who joined us very early. Certainly, we cannot acknowledge everyone who joined us on this show today. I have here in Simon Edo Gabriel from Nasarawa. I have Peter Remy Zugu from Delta State. I have Yusuf Shamaki all the way from Zaria. Tajuddin Saloro from Lagos. Muyiwa Olajide from Ilaro in Ogun State. Success Iwezu from Benin City. Sosoolu Olusoji from Abeokuta, Ogun State. Sanusi Rasaki Bamidele from Osun State. Zaka Bako from Jalingo. That tells you our members all over the country, even outside the country, with us. Abiola Idowu from Canada. They are all here with us on ICAN on Air, particularly on today's episode, corporate governance, key to financial responsibility, accountability, and transparency. Of course, you agree with me that the guest has been going on fine, talking and breaking down this topic. My HT, sir, taking it from where you stopped. Now, let's now go and see the other side, which is the tenets of corporate governance. So I would say, considering the current situation, the economic situation in Nigeria, to what extent can organizations be able to uphold the tenets of corporate governance without cutting corners?
Mm-hmm. Thank you very much for that question, Tosin. I will tell you that corporate governance is linked to ethics. And ethics is you being able to identify what is good and what is bad. And the spirit of positive ethics, we say, do that which is good at all times. One of my mentors once told me that if you say you steal because you are hungry, it shows that you are a thief before. You are just looking for opportunity to execute it. So talking about corporate governance, I will tell you that as a matter of fact, you are not supposed to cut any corners. We know things are hard. So my response will be that continue to do what you think is right for your business. And don't also forget that if you go to theories, people will tell you that what you think is right is also relative. You understand? But whichever way it is, I will say organizations in Nigeria should endeavor to always prioritize ethical conducts, transparency, and accountability, irrespective of how difficult things are, because that is what will stand the test of time. You know, organizations should cultivate a strong ethical culture from the top to down. You know, what you see in most organizations is that management will try to enforce corporate governance down to the bottom, but at the top, they are doing the opposite. So what do you think? The people at the bottom and the middle, they say, nothing will happen. Maybe they are also doing it. So they should drive that culture, and it should be driven from top to down, you know. Then, of course, they should establish a strong corporate governance, which should include that they have competent, independent board of directors with clear roles and responsibilities. You know, I mentioned to you the other time that for some organizations, they just put anybody in the board of director, people that cannot speak to power, maybe because they are related. And that's why I also encourage that in this board, there should be some independent directors that have nothing at stake. They're just there to say things the way they have. They must be people with stronger personalities. So they will tell you, no, we know that we're having cash issues, but that doesn't say you should evade taxes. Do the right thing. I've sat on one or two boards where the chairman will tell you, no, I can't be here, and you want to do what you want to do. So in answering your question, I'm saying that no matter how bad it is, organizations should continue to do the right thing. Anytime you try to cut corner to take advantage in the short run, I can tell you for free, you are keeping problems for the future, because somehow the corpse you think you have buried, if you don't bury it well, the leg will shoot out, and it may have a serious impact on the business in the future. We all know Nigerian is hard. So instead of cutting corners, you can do a lot of plannings. You understand me? You can do some moderate creative accounting. Underline the word moderate creative accounting, which, if I go to theory, is also different from window dressing. Take advantage of loopholes in tax law, take advantage of regulations and all that within the law. You understand? Instead of you cutting corners, because it can only be for short term, and usually it always have a long term implication, which may bring the business down. So that would be what I would say. And such business should also engage the stakeholders very well to bring issues to the table, as against wanting to cover this or wanting to cover that. It doesn't speak to equity, which is one of the principles of corporate governance. Thank you.
Okay, thank you very much for that succinct response. So, like I promised, I want us to take as much we could take from the audience today, because this topic is actually speaking to almost everybody, and questions are coming in from right, left, and center. And I will also plead with my guests to try and make it a bit out and snappy on those responses, so that we can take as much questions as we can, sir. The very first one is coming from Larry Daramola, and I think you have answered this, but just to also answer his question, Larry is asking, is there any difference between corporate governance and business ethics? Over to you, sir.
Very good question. Like you said, I've mentioned this. Corporate governance and business ethics, they go almost hand in hand. You can't talk corporate governance without talking ethics, So corporate governance is saying put processes in place with which you will direct and run your business. Ethics is saying that do the right thing at every time. Do you understand? So there's no how you want to implement the tenets and principle of corporate governance in your business without being ethical. So if you see some of my responses, I've been saying ethical conduct, good ethics all along. So they go together. They don't exist in isolation, because implementing corporate governance, it means that you are being you are doing positive ethics. You are being ethically correct, if I can use that word. Yes.
Okay. Thank you. The next question, media, can you help us to spotlight that, from Abel Asain, one of our own? So, my wonderful teacher, permit me to ask, how can we encourage family-owned businesses to embrace corporate governance principles in order to promote sustainability of the business?
Yeah, that's a very valid question. Dr. Abel, thank you for this question. So people perceive, or there is a school of thought that says that when you talk about corporate governance, you can only do it in big companies, that corporate governance cannot be done in SME or a family-run business. And my response to it is a capital no. You understand me? It's a no. Corporate governance spirits, corporate governance tenets can be instituted in a family business. But the question is, it may not be as elaborate as compared to what we see in big organizations. So for instance, if it's a family business, you need a board. And on that board, you need to bring in somebody that is independent, that is not related to the family, so that that person can see things from another perspective and bring value to that family business. The board also need not be 5, 6, 7, because if you also look at the code of conduct for corporate governance that was brought to life by the Financial Reporting Council, in those areas they did not specify the number of board members. So they left it to the discretion of companies based on their size, based on their stage in the business, in terms of talking about life cycle and all that. So my response is that they should mirror the tenets of corporate governance that we have in the big company, but they should do it according to their size. For instance, let there be policies and processes documented For instance, let there be external auditor, even though we know you report to yourself, but let somebody come and tell you what you are not doing right. Then engage on merits. You want to employ people on merit, not because it's my brother's daughter, at the end of the day, if you do that, those people may not have the right skill to run the business. And what do you get? Corporate failure. So
Wow.
that would be my response, sir.
Okay.
Do it according to your size, and let there be, decorum, because corporate governance is about decorum, putting places in place, putting structure, let things be done correctly. That's what it's all about. Yes.
Okay. Thank you very much for that response. Shokunbi Babatunde, I think he asked 2 questions. Permit me to take his second question because there are a lot of questions to be taken today. He said, if there are no requirements on diversity in the board for non-executive directors, or if the firm fails to meet up diversity on the board of non-executive directors in according to the code of corporate governance, what will happen? So I think he's trying to talk of diversity, the issue of diversity in the board, that if we have companies who fail to meet this issue of diversity in the board, what happens to them?
So I would say that Financial Reporting Council, according to the Financial Reporting Council Act of Nigeria as amended to date, they have the power to look after corporate governance of organization, especially for the public companies. So I'm very sure that they have a checklist with which they gauge the corporate governance in every organization that fall within their purview. So if you don't do it the way you should do it, because I'm very sure that you are supposed to have versatility in your board. There must be gender, the board must be robust, it must come with the right, people there must come with the right skill, education, qualification, and skill. So if you don't have it, you may be sanctioned by the Financial Reporting Council, especially if you're a public company. Yes. Of course, we encourage private company and small company to also do such, because it will always drive value, to the business. Tosin, are you there? Hello? Hello? Oh. Okay, I can see another question here. Heritage Bank license have just been revoked by CBN. Sir, do you see a breach of sound corporate governance leading to the bank insolvency? I would say personally, I'm just actually reviewing what happened in Heritage Bank, but I can tell you for free, CBN in their wisdom, which is their regulator, is likely to have seen some breaches in corporate governance before they place that sanction on Heritage Bank. I'm aware that some of the issues they picked is relating to their capital adequacy ratio that is very low compared to the benchmark that it should be. I'm also aware that they said they have excessive debts, in their books. And of course, I also heard, that most of the loans they've given out, they are not collateralized, which are breaches to sound corporate governance. So, looking at those 3 points I've mentioned from what we have read all over the social media and internet, I think one could say that those are breaches of solid corporate governance,
Okay, thank you very much. That Emmanuel Egego. Emmanuel is asking, what are the non-financial performance that corporate governance can help to achieve? What are the non-financial performance or benefits that corporate governance can help to achieve?
Yeah, thank you, Emmanuel, for that question. I'm sure you are aware that we're in the days of integrated reporting. We simply put is saying that financials or our annual report should not only focus on financials only, that we should talk more about sustainability report. We should cover ESG, environment, social, and governance report, and also should cover corporate social responsibility, CSR. So that's what you see now in all our annual report, especially starting from next year, because we have also adopted the ISSB standards on sustainability reporting. So we have a number of metrics that are non-financial, that are set by every organization. This depends on the company. It also depends on the industry, because we don't have a standard one that every organization should look at. So some of the things you will see is on about environment. What is the impact of your production? What is the impact of your operation on the environment where you operate? And what are you doing to mitigate the negative impact in that your area? Another one is social. What are you doing in your area to promote good conduct of your operation? Looking in terms of, are you recruiting from that area? Are you giving scholarship in that area? What social responsibility are you doing? And in terms of governance, that speaks to corporate governance actually. Do you have a framework for corporate governance in your entity? All these are non-financial. You notice that your operation is impacting your area. You're supposed to do some things to mitigate the impact on the people staying in those areas. Are you making profit from that? No. So these are what you do. Like I said, it depends on your size. It also depends on the industry where you operate. But you must be seen to be doing something, especially when you're a public limited liability company. Thank you.
Thank you so much, Master Tag, for that brilliant presentation. That's exactly the word of Dr. Abel has sent to you. Well done for that response. Okay, so we've been talking about corporate governance, the benefits, the principles, the spirit, the tenets, and all that. And my next question will be that, are there barriers to entrenching corporate governance in an organization? If there are, can you please run us through those barriers of corporate governance?
So there are a lot of barriers. I think I've mentioned some of them while I was discussing, and I will just mention again one or two. So number one barrier is corporate governance in any organization is supposed to be top down. People say that you learn more by what you see than what you are taught or what you are told to do, that you learn more. So what am I trying to say? Some of the barriers we have in corporate governance that have led to, in some cases, corporate failure in some organization is that corporate governance is not driven from top to down. You understand? Some management team, some board members, they don't believe in it. And because of that, it's not working. The members, the employees, they are taking advantage of that to also boycott it and to make it fail in organization. So what am I saying? It should be driven from top to down. It must not be perceived to just be that they have documented it. We must see, it must be seen by the leaders of business that they are keeping to the tenets of corporate governance. They are also living by it. By that way, every other person across the cadre can also come in to do it. Another barrier to it is that people should drop their personal interest for the business interest. Anytime there is suboptimal decision, which is the decision an individual or management makes for their own personal interest, it will frustrate, it will hinder the implementation of sound corporate governance. So people should serve with utmost good faith and relax on their personal interests once they've been taken care in terms of remuneration, and do stuffs in line with the corporate governance, and do stuffs that will improve the financial performance of the business as against doing their personal interest. I won't lie to you. One of the killer of corporate governance in organization is personal interest. Once there is strong personal interest from one of the people charged with governance, there is problem. There is problem. Before you know it, it will cascade down because they will say, our guy is doing it now. Let's do our own. You understand? So these are some of the very key factors, conflict of interest and personal interest that kills corporate governance. Our leaders in business should be contented and they should run the business the way it should be run. Thank you.
Thank you very much. And as we coast home, because we just talked about another area to it, which is the personal interest, and that will launch me into this. What role does boardroom politics play in stalling the achievement of financial responsibility, accountability, and transparency that we all preach and we long for in some organizations? Briefly, sir.
So we say that, okay, I'll just take that very briefly. We say that everywhere there is politics everywhere. We have positive politics, we have negative politics. So what I would just say is that positive politics will entrench corporate governance, but negative politics will kill corporate governance because they will not just want it to work. If bring it to the table at the board meeting, they would have done meeting before meeting and they will kill every strong and positive initiative, which is not in the best interest of the business. So my suggestion would be at the board, let's do positive politics. Don't kill what will bring about improvement of financial performance. Don't kill what will bring about increase to shareholders' value. But we know that there's politics everywhere. Thank you.
Wow, wow, wow. It's been a wonderful edition, we must say, especially with our own Honorary Treasurer of ICAN, Dr. Seyi Olanrewaju, for the succinct responses and the exposition, especially on this topic. So we want to say thank you for coming on this show today and for sharing your wealth of experience with our members and friends of the Institute. On behalf of the producers of this program and the editorial team and our viewers across the globe, we appreciate your time and effort, and we say thank you so much for coming, sir.
Thank you, Tosin, for having me. God bless.
Thank you. It is a pleasure, sir. Thank you very much. And now quickly, let's go and take the announcement that we have for today. However, before the announcement, of course, we want to say congratulations to all those who are able to make it in the result, in the ICAN result that is being released today. Congratulations to everybody who were able to scale through either to that position of being a qualified member, or for those who qualified to the next stage, we say congratulations. And for those who couldn't make it, either for 1 or 2 or 3 papers, we say don't stop there. Don't stop at trying. Continue till you make it happen. We wish you success even as you continue. And now quickly to the announcement that we have for today. Of course, the 54th Annual Accountant Conference is here, and that is the largest gathering of chartered accountants in Africa. That would not be a mistake. The theme for this is Governance Reimagined, Mapping the Future, and that will be coming up between 7th and 11th in October 2024. The venue is the Velodrome Moshood Abiola National Stadium, Abuja. What are you waiting for? Go ahead and register today. Early birds take some percentage discount. You will certainly enjoy all about the 54th Annual Accountant Conference. Also, we have the ICAN BOI Innovation Hub. It's organizing a virtual event on Zoom to discuss impact of government regulations on fintech and user relationships. Date is tomorrow, June 29. So the Saturday, June 29, 2024. The time is 10 a.m. Please join this, and certainly you will never regret you do. Also, the Governing Council of the Institute has approved an additional and final grace period for documentation and notification of the 36 months mandatory practical audit training, which is practice attachment, to end by 30th June 2024. Members and students of the Institute who are yet to register should go ahead and register so that they can take that advantage. And that is the show for today. I want to thank you all for being part of this show today. Till I come your way again with another guest, another topical issue, I say stay safe and say stand. On behalf of the general team and the producers, I remain to see FCA, saying thank you for watching and bye for now.